Local stocks start July on a weak note. The JSE All Share index is trading slightly lower, around 65,980 on the first trading day of the month, after booking an 8.1% loss in June. That was amid persistent concerns over the impact of inflation and tighter monetary policies on global growth. Viv Govender is portfolio manager at Rand Swiss, joins us now to speak about all of this. Viv, good to see you. First person to comment on these developments on the first day of the month. A bit shaky, isn't it, as far as the week overall was concerned? How are we looking?
Well, our market is not doing that bad. It is slightly up at the moment. We are seeing U.S. futures under a bit of pressure, and the U.S. market was down last night. So, it's been a bit of a roller coaster, as you can say, from what's been happening with regards to stock markets. What the real fear out there is at the moment is a recession. Inflation has caused central banks around the world to raise interest rates, and that's pretty much almost always going to result in some kind of downgrading growth. And in fact, people must understand it's a clear link. The way the central bank controls inflation is by raising interest rates in order to drop growth, which will drop inflation. Interest rates themselves just don't drop inflation. Interest rates drop growth, and growth decreasing drops inflation. And so that's the thing to concern yourself about. And the second part is that we've had statements from the US Fed as well as from the EU, etc., looking at pretty hawkish at the moment, and that means that we're going to see, at least for the near future, fears about interest rates hiking, and therefore the market is fearful of that.
Mm-hmm. We've also got these recession fears that are currently dragging down oil prices, but gold is on track for a third weekly decline at the moment. How should we understand and interpret this?
Well, the oil prices are very dependent on what's happening in Russia, because Russia is a huge exporter of oil. So that's obviously something to be concerned about. I think you're looking forward into the second half of this year. Europe is going to be in real trouble when it comes to energy supply when they go into winter. I mean, Europe gets cold in the way that Africa does not get cold. You can put a blanket on here. It might be a little cold, but you're not going to die. In Europe, in some places, you need to have some external source of heat, or you will actually die from the cold. Mm-hmm. That means we have one of the biggest amounts of GDP in the world. It's up there with the US and the Chinese. Going into a period where they desperately will need some resources. And what happens when that occurs, you're going to find those resources are going to be much more expensive. Unless the Europeans can find a stable supply of resources from, for instance, the Middle East or from the US, etc., energy resources, that is, we could be seeing quite a big amount of pressure coming through in the second half of the year for that.
All right.
Looking overall, inflation is obviously under pressure of an issue. But gold is, I think, suffering to a certain extent because we are seeing, for instance, in India, they're putting tariffs on gold imports. India is one of the biggest demanders of gold in the world. They use it quite a lot for jewelry and for religious circumstances and so on, for ceremonial things. It's much more of a love trade that we see. Indians love gold. In much of the West, gold is more of a fear trade. People buy gold when they're afraid what the world might be doing. And so I think that's one of the things that is actually bringing the gold price under pressure as well.
The latest ABSA Purchasing Managers Index declined to 52.2%, index points, I should say, in June. What does that tell us about where we are economically?
Look, we are slowing down. There's no doubt about that. And like I said, it makes perfect sense. If we are raising interest rates, that's in order to slow down. The Reserve Bank is raising interest rates. Okay, of course, in one sense to keep the rand strong and to keep track of the US. But one of the effects of interest rates increasing is to slow down, and the economy is slowing down. The consumer is under pressure. We are hitting incredible levels of inflation, especially in things like food and petrol. We saw that CPI number coming out recently showing that transport inflation has gone up quite substantially. Food inflation has been rising. And remember, we're going to be hitting more fuel price increases because we didn't absorb or reabsorb that tax holiday which was last time around. So now we're going to be having that tax holiday being removed, and that's going to effectively also start increasing fuel prices over the next few months as well. So I think right now the consumer is under pressure, the global economy is under pressure. It's harder to access capital because of the price of capital, because interest rates are higher. So it makes sense that we are slowing down.
Mm-hmm. And the Eastern Cape's economy, particularly the province's automotive and agriculture sectors, set to receive a significant boost when they get that 9.1 billion rand in infrastructure development funding. How will that be spent, and how much can they gain from it?
Well, look, when it comes to the infrastructure spending plans, of course, we would hope they'll be spent properly. Unfortunately, we've seen enough issues in the past where, that's not been the case. Hopefully, we send things like transport, provision of water, electricity, transport links, to get the produce out of the province, and those will be the kind of things that we're looking to be spent on, that port, that kind of stuff. But like I said, historically we've not seen the best action when it comes to infrastructure. I mean, not the only case. I mean, look at the US. They spent over $1 trillion in infrastructure, and you can't really point to $1 trillion worth of access happening there. Most parts of the world, you find these multi-billion, around $1 billion in some cases. In fact, projects are often much less impressive than you end up thinking.
Viv Govender, Portfolio Manager at Rand Swiss. Have a great weekend.